Well, today was Fed Day, and boy, was it a doozy. Um, Now, it wasn't that Powell said anything unexpected. The overall statement was exactly what we expect. It's not time to hike rates. We know that. I've been saying since the Fed first cut rates, they're never going back up. At least not willingly. Powell is not the kind of guy. If he couldn't tolerate raising rates before when he was doing it, and he gave up so quickly, far quicker than Greenspan ever would have. He is not 1/8 of the man Greenspan was, let alone the man that Volcker was. And so Jerome Powell will never tell you, hey, I'm thinking about raising rates, because he's never thinking about that. And he's being totally honest when he says that. Nope. Because somebody asked him at a press conference, a couple times ago, hey, are you even thinking about raising rates? And he said, nope. He's not going to do it. So people need to get that through their thick skulls. This will never be a surprise. Now, with that out of the way, he had a lot else to say, because what Powell has to explain is that the Fed is supposed to, they have a dual mandate, as we all know, to maintain low unemployment and low inflation. For some reason, the Fed has picked the number 2%, I guess because Milton Friedman said that. And so the Fed now has taken that and run with it. That was Milton Friedman's number that he came up with. I don't know why Milton Friedman came up with it. I think he just pulled it out of his ass. But Milton Friedman said there should be 2% inflation, and that's that. Inflation expectations, if you look at 10-year break-evens, are now at 2.4%. That means, that's the market's expectation of what inflation will be on average over the next 10 years. Now, I think the only way that that's going to happen is that if there's massive deflation at some point over the next 10 years, because inflation in the near term is going to be much higher than 2.4%. We're already seeing that. In fact, the only way that the Fed is able to hide inflation is by literally ignoring everything that's rising in price and pulling it out of the inflation metrics, out of PCE or CPI. The prices of lots of things are going up astronomically, and everybody knows it. Everyone can see it now. Everyone knows that everything is expensive. You go to Lowe's, like I did recently, and a 2x4 was over $7. So if we're at that point in this whole inflation cycle, I think inflation's running a little hot. And so Powell was finally starting to get some questions from the press that normally are just like lapdogs for the Fed. And I think it's because some of them are starting to feel a bit betrayed, because they really do look at the Fed as these wizards of smart who are much smarter than them. And when the Fed does things that don't make sense, these journalists think, well, they're just much smarter than I am, so I don't know what they're thinking. They must have some, they're playing 4D chess. That's the way that journos typically look at the Fed when they do ridiculous, absurd things. Now, even Powell admits that inflation is going to move higher from here. Prices are going to go up even faster, because remember, inflation is the rate at which prices are rising, and prices have been going up very quickly recently. Powell is saying that they will go up at an even faster rate. They will not just continue accelerating and rising at this current rate, and eventually it will moderate. Now, what does moderate mean? Does that mean that it will level up and stop accelerating and we'll just settle right in at, 5% inflation, if you calculate it fairly, 7% calculated fairly? Because we know for a fact that 2%, this lie that the Fed has been peddling, is obviously not accurate. The cost of living, the cost of things that people actually need to survive, is going up rapidly. Nobody can afford a house. Nobody can afford lumber to build a house. I mean, this is something that I considered, because housing's so expensive. I thought, why don't I just build myself a little minimalist shack or something, out in the woods, build a little cabin. Well, then I decided to do the math and see, well, if I wanted to build like a little 500 square foot, ridiculous, like a studio apartment out of wood, what would that cost me? Putting government regulation aside, just in materials. And it was outrageous. Nobody can afford to do that. And Powell has the gall to come out and say that, well, housing prices are up, yes, and that might be a problem for people who are, in entry level trying to buy their first house. Gee, you think? I mean, there are shitholes in my town that are going for over $250,000, over $300,000. Not nice houses. Fixer-uppers, to be kind. Houses that are not livable currently, that you would have to totally gut and redo just so that you could live there. I'm not saying that they're not pretty. I'm saying that they are unlivable. Over $300,000, over $250,000, depending on the area. So yeah, that poses a problem to someone like me or somebody else, who makes normal income. And so what's Powell's response? Well, there's not enough supply. Not enough supply. There's plenty of supply. The population in this country is not growing rapidly. It's growing very slowly. People are not having nearly as many kids as they used to. Housing prices are not going up because of a lack of supply. Now, of course, the supply problems are going to always be localized. But if it was as simple as moving to different places where it was more expensive, well, in the places where housing prices have gone up astronomically, people would simply move to other places that prices are not going up astronomically. If this was just because of, let's say, population movement, and that was the reason why, let's say, houses in Florida go way up, and houses in other states go way down, it should equilibrate, because people who can't afford to live where they are in more expensive areas would instead move to the cheaper areas. But that's not happening. It's not like in some parts of the country housing prices are falling just as much as they're rising in other parts of the country. The housing market in the U.S. as such is rising rapidly. And this is with massive increases in the supply. The amount of housing that is under construction just in the part of Florida that I traverse is not insubstantial at all. It's quite frightening to me to see how much of our natural environment is being clear-cut and completely, put through wood chippers and replaced with this ugly gray suburban monoculture. I mean, it disgusts me on a personal level, and as someone who lives here. And then for Powell to come out and to say that the problem is that they're not building enough houses. I mean, it's ridiculous. It's you, Jerome. You're the reason why housing costs so much. Because you keep buying up all the mortgages. You create this incentive for the banks to keep lending people more and more, money to buy more and more homes. You are the one bidding up the price of real estate in this country to ridiculous levels, that have surpassed, Ben Bernanke and Alan Greenspan's bubble of the 2000s. This is not hard to figure out. If you look at an index of housing prices in the United States, adjusted for inflation, it's a straight line until you get to 1999 to 2006, in which it goes straight up ridiculously. And then that line, it peaks. In 2006, housing prices start to come down, and then it comes down to where they were from, the last 100 years, from, all of the 20th century. It stayed flat. It went back to that level in 2012, and then ever since 2012, it's gone straight back up again. What do you call those, Jerome? Okay, I know you've seen that chart. I know you look at that chart. I know you're monitoring it. You're saying, "Oh no, we can't turn the tide. We can't let that bubble go over the hump. We can't start to go downward again, or else we're going to go back to where prices were in 2012 and 1999, where people could actually afford houses." I knew people, not very wealthy people, a lot of people, good people, who were never able to afford a home in my lifetime that I knew, who after 2006, because they were responsible people who worked a good job, who saved their money, were able to finally buy their own home. It was wonderful to see people, able to, I think of one married couple I knew in particular, who both worked at Publix. They wanted to start a family and things, and, they were never able to, of course, to own a home, and they were able to buy a house for under $100,000, which in some parts of the United States you might be able to do, but in any of the coastal areas of Florida, at least in the more southern parts where there's high population density, that's a very rare opportunity. And, people talked about it at the time, like, oh my gosh, housing prices are at historic lows. Actually, no, they're not at historic lows. They just reverted to the mean, the historic mean. They're not historic lows in any sense. It's just that we were at historic highs for the past, decade or so before that. But, old Jesse Colombo, who, maybe some of you follow him on Twitter, he coined, at least to my knowledge, I believe he was the one who coined the term the everything bubble, because we don't just have a housing bubble this time. Sure, there's a housing bubble. But if you compare it to everything else, housing doesn't look like it's gone up that much relative to the rest of, all the other things that go into the cost of living. So we have an everything bubble now. You have a bubble in stocks and bonds, in real estate, in commodities, in crypto, and yes, so you're going to get mad at me because I said crypto's a bubble. Yes, it's a part of the bubble. It's going up with everything else. And then Powell, in the midst of all this, he says, well, because he has to come up with a justification because the journalists give him some credit, are finally starting to push back and say, hey, you're getting this inflation that you wanted. Their prices are going up ridiculously. People can't afford anything. Cost of living is obscene. Why do you keep rates low? And he says, well, we need to get back to full employment. We're far from full employment. There's a lot of people who lost their jobs during the horrible pandemic. And we want them to get their jobs back. So we got to keep printing money to supposedly stimulate the economy so these folks can get rehired doing something else. Well, Jerome, do you think that perhaps if the government had not been incentivizing people to stay home and not work for the past year, that the labor market might not be so loose, or that's the wrong term, that there wouldn't be so many people who aren't working? Because the labor market is not loose. It's in fact quite tight. The people who want jobs are employed. Everyone who wants a job can find it pretty much. At least that's, everyone I talk to, that's the case. Of course, in certain localities, maybe that's not the case. There might be certain distressed areas, but generally speaking, labor market is very tight right now. Yet there are still a lot of people who are unemployed. Why is that? Well, because for a lot of folks, they make more on unemployment than they would doing a job. Because if you're a very low-skilled worker, you don't produce much. The value of your labor is quite low. And so if you can make on average, let's say $17 an hour from the government, which I've heard that number thrown about a bit if you try and break down all of the combined unemployment benefits that have been introduced in the era of the sickness. If you divided it by 40 hours a week, it'd come out to something like $17. And that's why you're seeing certain companies like McDonald's. There was a story about a McDonald's in Tampa that was offering people $50 just if they'd show up to a job interview. Because if none of you have ever tried to hire somebody in a business, it's very hard to get people to show up if it's not like a high-skilled job kind of thing. With an ordinary run-of-the-mill job, you get a lot of folks who just don't show up to the interview. And McDonald's is saying, hey, if you'll just show up, we'll give you $50. Okay, please, come apply for a job. There was somebody took a picture of a flyer in a gas station that was saying that they'd offer you $500 if you come work for them. They'd just give you $500 right off the top. There's one paycheck extra added onto the top just if just for taking the job. And you have to do that to incentivize people when they're being paid to stay home, and when the cost of living is going up so much that even if you are working, you feel very poor. And at the end of the day, it's all Jerome Powell's fault, and no amount of excuses can change that. I mean, if even the financial media are starting to give him the slightest pushback on this, that means things are really, really bad for the Fed, and that the wheels are starting to come off, because Powell knows that what he's going to do, if he lets inflation run particularly hot, and it's not transitory like he says, because that's Powell's story. Oh, it's transitory. It'll go away on its own. And if it doesn't go away, I'll end it. Trust me. Nobody believes him. He's no Paul Volcker. He would never do that. Bernanke wouldn't do that. You think that Powell would? Bernanke didn't raise interest rates up to 5%. Because, or actually, that might have even been still Greenspan when rates started rising. Yeah, it was still Greenspan when rates started rising. Bernanke continued that. He didn't do that because he was a tough guy, and he thought, I'm going to fight inflation. No, he did it because he really didn't understand that he was going to pop the bubble. And as soon as he realized that he popped the bubble, what did he do? It took interest rates down to zero. And Powell was just more cautious because of what happened to Bernanke. Powell was more cautious, and he said, you know what? I'm not going to pop that bubble. In fact, I'm going to inflate it to be the biggest bubble in human history. And so he pulled down interest rates to zero, and he's saying they're staying there, okay? They're not going up. They're never coming up. Because if Powell even hinted at raising interest rates to fight inflation, his whole house of cards would come tumbling down. Stocks would crash, bonds would crash, real estate would start to fall. And Powell has no tolerance for that. He wants to be universally praised for making everybody rich. He just wants to keep printing money and handing it out to all his buddies so they can pat him on the back and say, "You done good, Jay." So I think it's time officially to buckle up. Things are getting bad. The tips are, or I shouldn't say the tips, the 10-year break-evens, which are function of the tips, are at their highest level since 2013, I believe. 2.4%, which again, as I said, means that the market thinks that on average, inflation is going to average 10% over the next 10 years. Powell is telegraphing, saying inflation is going to get higher from here. And so things are going to get tough. It's going to get expensive to live. And who knows? I haven't even gotten into thinking about the implications of the end of forbearance, which honestly I don't see how forbearance ever ends. But that's a story for another day. But the price of everything is just going to keep going up because Powell is the one causing this, and he is saying that he will not deal with the problem. So the problem is only going to get worse. I mean, hell, Biden is pouring gasoline on the fire. He just wants to keep spending more and more money. So he wants another $2 trillion stimulus bill after $2 trillion stimulus bill. That's not helping anything. If anything, if the President of the United States wanted to do anything remotely helpful, he would be trying to fight inflation. He would be cutting government spending and getting, a very easy way to get inflation under control. Either you cut government spending or government deficits, I should say. Cut the deficit, or you raise interest rates at the Fed. Either way, the answer is you must stop injecting free money into the economy. And so when neither the Fed nor the federal government will do that, will pull any liquidity out of the economy, and they just want to keep pumping it in at ever higher and higher rates, the only thing that can end this cycle is inflation pushing up interest rates, because there is an inflation premium built into interest rates. So therefore, if inflation rises, and we really do see we see inflation, and the official numbers start to be high, and everyone can see it, that is when bond yields will start to rise, mortgage rates will start to rise, loans in general will start to rise, and when that corporate bonds, yields are going to rise, that is when the bubble can come undone, and when prices can finally come down. So, as far as I'm concerned, inflation must get worse before it gets better. Staying this way is not a good thing. We don't want to stay. We want it to run hotter, like Powell is saying, because Powell will not raise interest rates. The only way that interest rates are going to rise is if the market pushes them higher in response to the high rate of inflation. And the swifter that happens, the swifter that effect of rising interest rates. We want that rates to rise at a breakneck pace. It would be great if rates just doubled overnight and then tripled and then kept going up and got up to like 10-20%, like they were back in the 80s. That's what we need in order to put our economy back on the right track. So it feels odd, but I have to, in this case, cheer for higher inflation, because Powell has made such a mess of this economy. He refuses to clean it up. That's the last thing. That's always what ends up being the final check on fiscally irresponsible governments. It always ends up being inflation. And for years we were told that this was impossible in the United States because QE back in '08 did not create hyperinflation like Zimbabwe. We were told that inflation is not something you have to worry about in the U.S. The U.S. can print as much money as it wants because we're the world reserve currency and blah, blah, blah. Now we're starting to see that that is in fact not the case. That we too, the United States of America, are bound by the laws of economic gravity. And remember, we don't need hyperinflation Zimbabwe style in order for this all to end. We need, I think, a 1970s style inflation in the official numbers, just enough to push up interest rates. Because if rates rise, prices are going to fall. This economy is built on an asset bubble. We cannot tolerate high nominal interest rates. Remember, from, 72, 71, when the stock market bubble of the 60s popped, stocks were flat. Asset prices were flat throughout the 1970s. They crashed, they came down, and they didn't go back up until the 80s, until the yuppie era of the Reagan administration, where Reagan was just spending flagrantly and built up like a $4 trillion deficit or something. Or wait, $4 trillion deficit. Maybe that was George W. Bush. I can't remember. But Reagan built up maybe he quadrupled the deficit, I'm thinking. But anyway, that's where I see this having to go. Not hyperinflation, 1970s inflation. That's all. Stagflation, essentially, what Peter Schiff's been saying for a long time. I didn't really understand what he meant at first when he was saying that. But as time has gone on and things have played out a little bit more, I've warmed up to his position on that. I think stagflation is the correct term to describe what we're going to have to move into, because that is, the Fed is acting just like the Fed was back in the 70s, cowardly. They will not do what needs to be done. They will not rein in inflation. They're just going to close their eyes and hope it goes away. And so that's where things stand for now. So I guess I'll end it there.